Welcome to today's episode of Pharma Newsroom, your easy insights into all the biggest pharma companies in the world. We thank today's sponsor, Pharma AI Academy, your education partner for pharma.
Welcome to the Deep Dive. We take the information you want to understand and, well, really dig into what matters.
That's the idea.
Today, we're focusing on Johnson & Johnson's Q1 2025 earnings. We've got slides, bits from the earnings call transcript, quite a bit of material provided by a listener who's looking at this from an investor angle.
Exactly. So our mission, if you will, is to pull out the key highlights from all this for you, the investor, what really stood out this quarter.
And just a quick reminder up front, this is purely an analysis of the info they released. It's definitely not financial advice.
Absolutely not. Also, if you find this helpful and want more insights, especially around AI in the pharmaceutical world, please do subscribe to Pharma AI Academy right here on YouTube. It helps us out and gets you some great training.
Good point. Okay, let's jump in. The big picture first. Johnson & Johnson's worldwide sales. They hit $21.9 billion in Q1.
Yep, which is up 2.4% compared to the same time last year.
But the interesting bit for an investor maybe is when you look at the operational growth. So that's taking out the currency ups and downs.
Right, and that number looks better. It's 4.2% growth operationally.
So you can see currency really took a bite this quarter, a negative impact of about, what, 1.8%?
Exactly. That 4.2% operational growth, well, it probably gives you a clearer sense of the underlying business momentum without those exchange rate headwinds. It's a key number.
Okay, so moving down to earnings. The official GAAP diluted earnings per share, EPS, saw a massive jump, up 238.8% to $4.54.
Whoa. Yeah, that's huge. But you have to remember, that number includes reversals of some pretty significant special charges. It's not purely operational profit driving that.
Right, exactly. So the adjusted diluted EPS, which a lot of investors tend to focus on for that clearer picture of ongoing profit, that came in at $2.77.
Which is still up, but a much more modest 2.2% increase.
Yeah, and you see that same kind of pattern with net earnings. The GAAP number was nearly $11 billion, up over 237%.
Huge again.
But the adjusted net earnings were $6.7 billion, up just 1.9%.
And that distinction is, well, it's really important for you to grasp if you're evaluating the company. GAAP gives the full picture, accounting-wise, but those adjusted figures, they help show the sort of recurring earning power of the main business.
And as always, worth remembering the standard disclaimers in these reports about forward-looking statements and these non-GAAP numbers we're talking about.
Always read the fine print.
Okay, let's break it down by segment. How does the different parts of J&J do? Let's start with Innovative Medicine.
Right. So Innovative Medicine brought in $13.9 billion worldwide. That's a reported increase of 2.3%.
And operationally?
Operationally, just like the company overall, it was up 4.2%. So you can see this segment was really pulling its weight against those currency issues.
And what's driving that growth within Innovative Medicine?
Well, a big part of the story there is oncology. Really strong operational growth, 20.4%. That's impressive.
20% oncology. Okay, that's a high-value area too.
Exactly. Growth there often signals good things for future profit margins, but it's important to note they did mention that Stelara biosimilar competition hit the overall Innovative Medicine results by about 810 basis points, so that's a drag.
Right. The biosimilar impact. We'll probably come back to that. But first, within oncology, what were the standout products?
Okay, so DARZALEX kept growing, market share gains, market growth. Good story there. ERLEADA also grew market share again, though they did mention the Part D redesign in the U.S. offset some of that gain.
We're hearing that Part D redesign mentioned a bit.
Yeah, it seems to be popping up across different products, sometimes helping, sometimes hurting. For ERLEADA, a bit of a headwind.
Got it. What else in oncology?
CARVYKTI. Sales are really taking off there, gaining share, but also, crucially, they've expanded their manufacturing capacity. That was a bottleneck before.
Right, getting more product out the door.
Exactly. Plus, you've got the newer launches, TECVAYLI and TALVY. They're adding to the growth as they roll out.
In RYBREVANT, I know there was some significant news there.
Yes, definitely a highlight, especially for investors focused on the pipeline. RYBREVANT, used with LESIL-UZE. The Mariposa study data was huge, showed a really significant survival benefit.
That's the kind of data that can change how doctors treat patients, right? A potential new standard of care.
Precisely. An overall survival improvement of over a year, that's major.
Yeah.
And from an investor's perspective, that could drive serious revenue growth and potentially give them stronger pricing power down the line.
Makes sense. But it wasn't all growth in oncology, was it?
No, definitely not. ZYTIGA is facing loss of exclusivity. That means generics are hitting the market, which almost always tanks sales for the original brand.
The patent cliff reality.
Yep. And Imbruvica sales were down too, facing more competition. And again, that Part D redesign impact was mentioned.
So a mixed bag, but strong overall growth driven by the newer therapies and key brands.
That sums it up pretty well for oncology. It's that classic pharma lifecycle innovate to replace the revenue from drugs losing exclusivity.
Okay, let's switch gears to immunology. How did that segment fare?
Immunology actually saw an operational decline, down 10.9%.
Oh, okay. That's quite different from oncology. Any bright spots?
Well, TrimFYA actually did well. Sales increased, driven by market share gains, and that was despite, again, some negative impact from Part D redesign.
TrimFYA. Remind me, what's key about that one?
It's the only dual-acting IL-23 inhibitor for Crohn's disease right now, and they highlighted recent data showing it was better than Stelara on endoscopic measures, important for showing differentiation.
Okay, so strong clinical data helping it compete.
Seems like it. Plus, they've got positive data in psoriasis and more coming for ulcerative colitis, the subcutaneous version. So still potential there.
But the overall segment was down quite a bit. Why?
The big factor seems to be Stelara, that biosimilar competition we mentioned earlier. It's hitting hard there. Plus, the Part D changes added to the pressure.
Right, Stelara was a huge drug for them, so biosimilars are really making an impact now.
Definitely. We also saw some interesting moves with Simponi and Remicade. Part of their growth came because Merck, or MSD outside the U.S., returned the European rights back to J&J.
Ah, okay, a structural change benefiting those specific drugs.
Yep. Remicade also had a one-time favorable patient mix, apparently, but it's also facing biosimilar competition, so lots of moving parts.
Okay, moving on. How about neuroscience?
Neuroscience also saw an operational decline, though less steep, down 7.0%.
The story there.
Well, Spravato is doing well. That's their esketamine nasal spray for depression, growing due to ongoing launch and more demand. They're positioning it as potentially a new standard of care.
So, a growth driver. But the overall segment declined.
Yeah, the main issue seems to be the Invega franchise, Sustenna, Exeplion, Trinza, Travicta, those long-acting injectables for schizophrenia. Sales declined, and they primarily pointed to the Part D redesign impact again.
Interesting how that policy change hits different drugs in different ways.
Very much so. It really depends on the specific patient populations and formulary positioning.
What about pulmonary hypertension?
More modest decline there, down 1.2% operationally. OPCMI and OPSY-NVI grew, market share gains, but again, partially offset by Part D.
And Uptravi.
Uptravi sales were down, primarily driven by that Part D impact, even though the underlying market grew a bit.
Okay. Infectious diseases.
Pretty flat, up just 0.1% operationally. General declines across the board, including the COVID vaccine winding down, but Eterant saw some growth, which helped offset things.
Right. And the last bit in innovative medicine, cardiovascular metabolism, other.
Commercially, strong growth there, up 23.4% operationally.
Wow, what drove that?
Mostly Xarelto. Apparently, it benefited from a one-time favorable patient mix, and interestingly, a positive impact from the Part D redesign in this case.
It cuts both ways. Really highlights how complex these dynamics are.
Absolutely. These segment details are so important for you as an investor. It shows where the engines are firing and where the headwinds are blowing. Much more nuanced than just the top-line number.
Definitely. Okay, let's pivot now. Let's talk MedTech.
Right, the other major part of the business. MedTech reported $8.0 billion in worldwide sales.
And the growth.
Reported growth was 2.5%, but again, operational growth was stronger at 4.1%. Currency impact there, too, just like in Innovative Medicine.
And what did they say drove that 4.1% operational growth?
They highlighted a few things. The acquisition of Shockwave Medical, which is now integrated.
Yes, the big cardiovascular acquisition.
Exactly. Plus, strong commercial execution and ongoing innovation in their product lines. Solid performance overall.
Well, they mentioned some one-off impacts, too.
They did, yeah. So these one-time events hit the worldwide MedTech results by about 210 basis points. So the underlying growth was actually even a bit stronger than that 4.1%.
And where did those hits mainly occur?
Particularly in orthopedics. Things like lapping a strong quarter last year due to some revenue recognition timing, fewer selling days this quarter, and also impacts from their ongoing orthopedics transformation program.
Okay, so orthopedics might look a bit weak on the surface because of those factors. How did the different MedTech areas break down? Cardiovascular.
Cardiovascular was the star. Really strong operational growth, 17.7%.
17%. Wow. What's behind that?
Two main things. First, Abiomed, that's their heart pump business, continued its double-digit growth thanks to strong adoption of the Impella pumps. And second, of course, the contribution from Shockwave Medical. Now, remember, that deal closed May 31st, 2024, so this Q1 2025 reflects having it on board. Its full-year impact will be even more visible going forward.
Got it. So Abiomed's strength plus the Shockwave addition powering cardiovascular. What about orthopedics then, with those headwinds?
Orthopedics saw an operational decline of 3.1%, but again, that's largely due to those one-time factors we just discussed.
So maybe not indicative of a fundamental problem.
That's the context they provided. And they did point out some positives within ortho strength in their hip portfolio and continued uptake of new trauma products.
Okay, so important context for that 3.1% decline. How about surgery?
Surgery was more modest, operational growth of 1.1%. They highlighted strength in biosurgery products like Surgiflow and Surgicel powder, and also wound closure, things like their barbed and plecuous sutures.
Steady, if not spectacular. And the last piece, vision.
Vision grew 3.7% operationally. That was driven by contact lenses, especially the ACUVU OASYS one-day family, and also their surgical vision business with innovations in their Technis intraocular lenses.
So overall for MedTech, strong cardiovascular growth boosted by acquisitions, ortho facing some temporary issues but maybe underlying strength, and steady growth in surgery and vision.
That seems like a fair summary. The integration and performance of Shockwave will definitely be something investors keep a close eye on in the coming quarters.
Okay, let's shift to capital allocation and what they're saying about the outlook. Based on the CFO's remarks, what are the priorities?
Priorities haven't really changed, according to them. Number one is investing in the business for organic growth. Number two is paying a competitive dividend. They paid out $3.0 billion in dividends just in Q1.
Significant return to shareholders.
Absolutely. Then comes strategic M&A mergers and acquisitions. They've been quite active there, deploying around $14 billion recently, including Shockwave.
Right.
And finally, share repurchases remain a lower priority compared to the others.
And what about investing back into the business? R&D spend.
Yeah, significant investment there, $3.2 billion just in Q1, and they generated about $3.4 billion in free cash flow during the quarter.
That R&D number, $3.2 billion, is pretty substantial. Always a key indicator for a company like J&J, right? Shows commitment to the future pipeline.
Definitely. That focus on organic growth, dividends, and strategic M&A funded by strong cash flow and significant R&D, that's the playbook they're signaling.
And what about guidance? What are they expecting for the rest of 2025?
Okay, for the full year, they're guiding to operational sales growth of around 3.8% at the midpoint.
3.8% operational growth for the year.
Yep. And for adjusted operational EPS, they're guiding to $10.60 at the midpoint. Now, importantly, that $10.60 includes an expected dilution of about $0.25 per share from an acquisition they anticipate closing in Q2 Intracellular Therapies.
Oh, okay. So they're factoring in the cost of that upcoming deal into the guidance already.
Exactly. And interestingly, they also said they expect operational sales growth in the second half of the year to actually be stronger than the first half.
Oh. For both segments?
Yes, for both Innovative Medicine and MedTech. So they're signaling an acceleration of growth as the year progresses.
That suggests some confidence in their pipeline and market momentum building up.
It certainly seems that way. That expectation of a stronger second half is an important piece of guidance for investors modeling out the year.
Did they give any hints about what might drive that second half acceleration? Any key milestones?
They did. They highlighted several anticipated milestones for the rest of 2025. In Innovative Medicine, things like potential progress with nipocalimab in myasthenia gravis, a subcutaneous under-the-skin version of Rybrevant for lung cancer, which could be more convenient, a subcutaneous Tremfya for ulcerative colitis, and data for Caplyta potentially expanding its use in major depressive disorder. Just a few examples.
So quite a bit happening on the Innovative Medicine pipeline front.
Yeah, lots to watch. And on the MedTech side, they mentioned continued progress with their Ottava robotic surgery platform. That's a big long-term play. And just generally further advancements across their cardiovascular portfolio, building on Abiomed and Shockwave.
And didn't they mention something about their own forecasts versus what the market expects?
Yes, that was quite interesting. They shared that for some of their key innovative medicine assets, their internal forecasts for sales out in 2027-2028 are actually significantly higher than the current average analyst estimates.
Really? So they think Wall Street might be underestimating the potential of some of their drugs.
That's the implication. It suggests they see potential future upside that perhaps the market hasn't fully priced in yet for certain brands and pipeline products. Could be areas for investors to dig into.
Fascinating. Okay, so let's try to wrap this up. If you're that investor listening, what are the main takeaways from J&J's Q1 2025?
Well, I think you'd see solid overall performance. The operational growth looks pretty healthy, masking some currency headwinds.
Right. Key growth drivers were definitely oncology.
Yes, strong growth there, despite some patent expirations.
And MedTech, particularly cardiovascular, which got that big boost from the Shockwave acquisition being integrated.
Exactly. But you also have to note the challenges. Immunology took a hit from Stelara biosimilars. Neuroscience saw declines largely due to Part D changes impacting the INVIGA brands.
So definitely a mixed picture across the segments.
For sure. But underpinning it all is that continued, very significant investment in R&D and a pipeline with quite a few important milestones expected just this year. Those are the key elements pointing towards potential long-term value creation.
Yeah, that future potential seems key. So just to reiterate one last time, this is our deep dive into J&J's Q1 earnings information. It's not financial advice.
Absolutely. Please do your own homework. Maybe talk to a financial advisor before making any decisions based on this.
And if you do want to keep learning, particularly about AI's role in pharma, which is becoming huge, check out Pharma AI Academy here on YouTube. Please subscribe, support the channel, and get access to that specialized training.
It's a great resource.
So maybe a final thought for you to chew on as we finish up. Thinking about those strategic acquisitions like Shockwave and the billions being poured into R&D, how do you think those moves really position Johnson & Johnson for the long haul, especially as the whole healthcare landscape keeps changing so fast?
Yeah, that's the multi-billion-dollar question, isn't it? How effectively can they translate those investments into sustained market-leading growth? Something to watch.
Definitely something to watch. Thanks for joining us for this deep dive.